Greetings, it's Dr. Jeffrey Scott, and this is my Market MRI Pro update for September 15th, 2025, Monday, Fed week. Title this one, Markets Melting Up into the Fed Rate Decision. Another day of the markets moving up with new highs on the spiders and the Qs, as the diamonds and the Russells had pretty much consolidation days. marketmripro@gmail.com is my email, and my Google group is called Top Down Trader. And no, I still don't have a website. Hey, I'm a 68-year-old guy. They didn't teach me how to make websites when I went to college. But I am working on one with a third party. So one of these days I'll have a website. But I do know how to trade stocks. This is for educational purposes only. Any recommendations are in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Specifically, in this video, we'll be using my tool, Market MRI Pro, which was designed for 30 minutes or less nightly reviews with some stock picking tools. And it takes longer to do the videos because I talk. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. I am a cancer doctor. I am not a financial advisor, and I've got tools in multiple platforms soon to launch in Metastock. If you want to communicate and you want to be part of a growing group of like-minded traders, think about joining my Google group called Top Down Trader. I police it heavily and kick out the spam. So you don't get a lot of commentary except from me. But when you get something, it's usually very meaningful. You go to Google Groups, click all groups, find Top Down Trader, sign up, tell us how you want to be contacted. It's free, and I'll give you a discount on my software that I sell unless it's special price like at holidays like Labor Day. Speaking of teaching, I love to teach. So we made a comment in the YouTube yesterday that I'm good at it too. I think so. I have a meeting October 26th and 27th in Palm Beach Gardens, Florida. Marriott Palm Beach Gardens, 2 packed days of education and software instruction. It's $12.50, includes food and a dinner cruise on Sunday night. Hotel's $155 a night. John Person has his 2-day meeting immediately before on Friday and Saturday, 24th and 25th. You can sign up for both and do one airfare and get 2 meetings out of it. If you sign up for my meeting, you'll get a $400 rebate. So if you don't have my software tool and you sign up, you immediately have a $400 rebate plus $100 from Top Down Trader. You can get the software tool for $500 off. If you already got my tools and you want the trade station, you can get it for $400 off plus the $100 Top Down Trader. If you don't want to buy them because you already got them, I'll give you $400 off the meeting next year. So you get lots of ways to spend that extra $400 off. Just contact me at marketmripro@gmail.com if interested. News and earnings. So Tuesday I got retail sales, import prices, industrial production, capacity utilization, business inventories, and home builder confidence. So we have a whole lot. The home builder one will be interesting as builders are having a tough couple of days in the setting of a probable rate cut coming. Wednesday, you see all the red arrows, the Fed decision, housing starts, building permits, and then Thursday, jobless claims in Philadelphia manufacturing. So there's still a lot of news to come. I think all eyes will be on the Fed. No rate cut, the market implodes. 50 basis points, I don't know what happens because I think if we get a 50 basis point move, some people think desperation. And 25 basis points is probably just right and probably what we're going to get. As you can see, there's not a lot of earnings this week. I think one that's going to be very interesting is going to be Lennar, which will be on Thursday, and what their comments are. I have a significant position in Lennar, and I actually bought protection. I'm having a bang up year. I may do another account reveal in the next couple of weeks. It's shocking how good September was. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. The comment about shocking, that's a positive comment. It just goes to show you, you got to play the market we have, not the one that you think we're going to get based upon seasonality and past experience. And As I say almost every day, it's very difficult to short all-time highs. And it's difficult not to be in the market. We're all waiting for that signal to get out. For more information about the tool, how I trade, anything about me, marketmripro@gmail.com for customer support on the product. And I'll announce a couple of updates today as well, coding at marketmripro.com. And then consider joining my Google group. If you're coming to my meeting, I'm not having it at this hotel. We have in the past, but it's expensive, especially in October when season is about to start. However, if you have loved ones, it's 10 minutes away from where the meeting is. Bring your loved ones, drop them there, stay there. Your family will love you. All right, on to the charts. So let's go into the market daily briefing. Perfect. And we could see, the markets on Monday, Qs were the leader up 0.86, closing right off their highs. Volatility was up off right at the highs. The spider was up 0.53 at its highs. Russell was up 0.43 in the middle of its range. Diamonds were 0.16, also in the middle of its range. The dollar is down 0.33. That's probably good for stocks, and Bitcoin was down. If we look at the new highs minus new lows at 52 weeks or 12 months on the NYSE and the NASDAQ, they both came down, but they're both positive. If we look at the one-day change in the S&P 500 sectors, I have about 4,000 stocks shoved into sectors and industry groups. When I show you my top-down approach, it's going to look different because it's a much broader market. We can see led by communications, technology, consumer discretionary. Now, if you're a growth stock investor, could anything be prettier? What was lagging? Staples. If you're bullish, you want staples on the bottom here. Healthcare had a rough day, down 0.85, and materials down 0.81, and energy down a third. So a mixed market there. Now, if you want to be concerned, yes, we had more sectors up today than on Friday across the board. We had more industry groups up. But when you look at the number of stocks up, only 42% in the S&P 1500, 46 in the NASDAQ, and 50 in the NYSE. So was today a strong day? Nope. You got to be in the right industry groups and sectors because overall it was a 50-50 day. Eked out gains on the indexes, but as many stocks were down as were up. If we look at the timing model, the weekly model, you could see new highs here on the spider, new highs on the Qs, up a little bit on the diamonds, and I guess on the weekly, up a little bit on the Russell. But you could see most importantly that prices above WMA, the bongos are blue, and therefore each of them has been green for quite some time on the weekly timing model. I don't like flip-flopping models. I follow the weekly model, and once it goes green, it typically stays green. Now, the daily meeting is going to be much more, daily model is going to be much more volatile and meaning more flip-flopping back and forth. Let's see what it shows. And you could see, again, big gap up, new highs on the spiders, new highs on the Qs. And remember, the week closed at the bottom of the red bar, so both the Russell and the diamonds were up as well. And most importantly, we're back to buy on all four of these. So monthlies are long, weeklies are long, dailies are long, all-time highs on the spiders and the Qs. My timing model says be long. I won't say it's not without fleas, and I won't say it's not that I'm concerned about the Fed decision. But right now, going into Tuesday, I am long this market. If we look at the US index ETFs, and I'm going to go a little quicker tonight because there's not been a massive change. You could see the spiders were up 0.53%, setting an all-time new high. You can also see what the short-term seasonality looks like is not great. The Qs also closing right at their highs, up 0.86, all-time highs. Seasonality questionable. The diamonds were up a teeny bit, 0.16. Seasonality not great. And the Russell, similar to the diamonds, was up, this one 0.43. Seasonality not great. Do we care about seasonality? No, we care about price and volume first and technicals. However, it does make me a little bit cautious that it would not be a shocker to see this market struggle a little bit here. What I like is that all the indexes are above the 17. They're all above the 50. And if we were to get a pullback, we have a lot of support within 3 or 4% below. If we look at the VIX, interestingly, the VIX was up today. Why was the VIX up 6.3% if this market is going to the moon? Well, does it have to do with the Fed rate coming in? Are there more concerns? Now, I'm an option trader and stocks, but predominantly options. And I love when the VIX is low because that makes the premium on my options low. In fact, I got into a Microsoft call, a broken wing butterfly, very wide pricing early on the day, and it was relatively cheap because the volatility is low. And then the dollar broke down again and was down another 0.33. If we look at commodities, dollar's weak, Fed is cutting, you better believe gold is going higher. Gold is at an all-time high, fresh breakout. Silver, yeah, I go back to 2011. We'll probably never take that high out in my lifetime. But gold and silver are strong. Oil's going sideways right above the 200 and below the 50. It's going to have to break above to change. My mind and natural gas is struggling below the 50. And then both the 10-year and the 30-year were down a little bit today, which I guess is good if you're looking at houses and stuff because those are tied more down a bit and you could see the red candles. So if you like stocks, dollar down, volatility still low despite a pop today, 10 years down, it should be good for the markets. If we look at the buckets, we saw something you don't usually see. And what we saw was it was a bifurcated market. Still a relatively neutral with the peak in the middle, but the stocks below and the stocks above both got higher today on the NYSE, on the NASDAQ, on the Russell 2000, and the S&P 1500. Kind of the day that I thought maybe we'd see a Hindenburg, but we didn't. But interesting, the amount of stocks above and below the Bollinger Bands, direct opposites. Above means an extended overbought market, below, underneath, and below. Um, that is pretty darn awesome. And that tells me the market's confused. Put that in the quiver of maybe things aren't so good. Look at the NYSE. NYSE was up a tad today after a pretty significant down day on Friday. Volume was low. You could see new high, new low, advanced decliners, up, down volume were good. No signals down here. And look at this NASDAQ composite, just a runaway move on decreasing volume. Stocks above the various moving averages are low. And you could see that AD line was actually down. So think about that. Talk about a divergence. We're setting massive all-time highs, big gap up, yet the AD line was negative. And we have a bango, which is exuberance at a top. So you put all that together, and what you got, I think, is a market that's telling us something. It might be long, might be okay, and I'm pretty long, but I think there's risk coming. And will the Fed trigger that? Will we get a couple weeks in early October, end of this month? I don't know. But boy, oh boy, the markets have risen. Look at this market. We'll have to see what happens. If we look at the market breadth tool number 2, you can see stocks, the 13-week new high, new low, which is a short-term top and bottom indicator. You could see that we're way off the top and way off the bottom. We're in the middle, so there's no signal there. And I asked the question, why is my AD line pointing down on both the spider and the NASDAQ when we're hitting all-time highs? That to me is divergence. The same thing as we're coming down here on the S&P 1500. Sorry about that. Um, Also coming down some with all-time highs. So look, I just a normal trader like you guys. Something's not right here. So, yes, I am long the market. Yes, I expect us to run up into the Fed report, but I just got a feeling this is a trap. And so I've gotten puts on some of my positions. I took some cash. I added to my gold. And I'm going to buy some gold miners likely tomorrow. And I had a great day today. I'm sure you did too, because the type of stocks we trade were doing well. But I just got a weird feeling that maybe, just maybe, the market's got a surprise coming before we run into new highs at the end of the year. And yes, you heard me. I expect us to have higher highs by the end of the year. Now, so what do I think about the market? I think the market's incredibly strong. As I said before, it is tough to short all-time highs. That said, I think there's some cracks in this, and I think we're going to have a pullback before we get to the next set of all-time highs. It's just my opinion. All right, let's take a look at the ratio charts to get a sense of there's leadership, and you can see communication is super strong, technology looks good, as does discretionary. And what looks weak? Staples, energy, um, industrials, financials, except for the big money center banks, look kind of light as well. So interesting markets. I think we got volatility on the way, and maybe that rise in VIX today was telling us something. If I go into the JAS layout, that's where I make the music as far as finding stocks that I might want to buy. You don't know my track record. I don't publish a track record. I'll show you my account a few times a year, but just go back and look at my old videos. One thing that we talked about yet on the weekend was a week ago I talked about Grab. It was up again today. Cheap stock. You had to buy a ton of it to make money on this trade. Owning 1,000 shares of a $5 stock that goes to six, that's a 20% gain, but it's only a dollar times 1,000. But in options, or since it's a cheap stock, taking the same position size, it was a significant move. I want to find stocks that do that. I want to find stocks. Whoops, so sensitive to this mouse, or all my mice, that's in an uptrend, that pulls back to support, moves off of support with a lot of momentum. See the blue dots out of a squeeze. This green crosses above the yellow, which is relative strength versus the spider, crossing with the moving average, volume, OBV, crossing with the moving average, and that's the signal I look for. And you'll notice right here, these two dots, that's my secret weapon. These two dots above the yellow line find a special type of momentum that I have found is associated with a good move in the market. So let's take a look. Let's go into the top-down view. You notice I've got 3759 stocks. Well, if I was to highlight every sector, I got 3,759 stocks. That means every stock is put to a sector in an industry group. Well, we want to make our lives easy. So I've ranked them by percent return. Let's take tech, communications, and energy. Let's take the industry groups and rank them by the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That gives me 395 stocks. These are only the industry groups in the top three sectors. Now, of that 395, I could come in here and I could click $5 price and 500,000 shares, and I'm down to 241. I like buying pullbacks and uptrends, so let's click the pullback and uptrend flag. And I like to buy things at this point in a rally above the 200. Let's hit OK, down to 62. Now I look for impulses. I don't want to buy things that are going nowhere. I want to find things that are starting to move. So now I'm ranking them by the number of bullish impulses. They're simple: gaps, volume, breakout, momentum. And let's take a look at UUUU, which I already have a position in. I've had a position in it since it was $4, or broke out here from $4. And you could see this thing likes to go sideways and then take a move, sideways and a move, sideways and maybe another move. You have CPR, volume breakout momentum. Here's your relative strength in OBV. It broke out today. What do I not like about it? Not sure I'd be entering a lot of new positions. The high jump is at 100%, which means This thing is pretty extended from its 200 and other moving averages. NXE, Next Gen Energy. Don't know much about it, so I can always look up in here, make sure earnings aren't coming. There's nothing there, which means it's probably a recent IPO. And go over here, look at the news. High grade subdomain, whatever that is. I'm not an energy guy and I'm not a mineral guy. High grade shoots within growing mineralized footprint. I'd have to read about it and figure out what they do. Um, but obviously, big uptrend, we move up sideways, and then this giant candle here. Now, high jump, it's getting extended. I have to take that, but look at that relative strength OBV, volume breakout momentum CPR. The next one is MaxLinear. It's a semiconductor stock, one that probably hasn't done much and participated in this rally, but it's got a similar setup down here with relative strength and OBV as well. And it took out, moved up off the 50. CSIQ is a solar stock. The one that I have is JKS, which broke out today. Didn't close at the high, so I have to decide what to do with it. But big move there. CCJ is probably the best of the uranium stocks. Now the question is, when do these things get expensive? It's got a forward PE of about 100. We know how rare and how important uranium and rare earth metals are. It's got a very strong growth rate from an earnings perspective with lots of surprises, good revenue growth, surprises. Earnings are not till November. It just feels like a teeny weeny dividend, 0.2%. Are all these stocks getting a little bit too extended? And the high jump there is 94, so it's close. Sky T, don't even know what this is. Skywater Technology, kind of loosey goosey. Not my favorite. OSS, a cheap stock. I want to know what this guy does. Big uptrend, sideways move, pulled back to the 50 and broke out. It's not extended. It's only at 50%. That one looks interesting to me as well. Meta, nice uptrend, pull back to the 50 and moving. Nice. Intel, I'm not a fan. And it's hard to buy coal stocks. I know that. I bought this before. There is a season of coal, and you can sort of see here this big cup and handle. And are we about to get a breakout? It's hard. You got to pinch your nose and not think that it's coal, but it pays a bit of a dividend, and it looks to me like it wants to go higher. So that's top-down investing at its best. All right. Other things I could have done is I could have not touched the sectors and just ranked the industry groups, and we would have picked up things like real estate development, information technology, and copper, and nothing new sitting up at the top. So that's top-down investing. That's usually when I stop. But those that know me know I got a secret weapon. Let me show you my secret weapon. Let's go in. Let's remove everything on the filters. And let's go back to the impulse. And let's go secret weapon time. Let's go to 2-day momentum, price and volume, weekly bond go up. Okay. Too tight. Let's clear that out. Let's go above the 200, price and volume, and 2-day momentum. Should be about 4. There's 2. All right. Again, too tight because I know if I do momentum up, I get some really cheap stocks. So let's just do momentum, price, and volume. And I want to show you the stock that I took action on today. And that stock, let's just look through this. CURX is a IPO that's done great, but I don't know anything about it. I don't own it. Lunar is robotics. Um, Again, you can look in here, get a sense of what the earnings are. They don't make much money. Here's the revenue all over the place. 56 times earnings to the negative. Not my kind of stock. It's below the 200. It's below the 50. Not something that I'm interested in. You know, why is it here? You might look and see if there's any news. Cash rich, execution poor. Bargain stocks ready for a bull run. All those things sound great, but execution poor is not attractive. We got two here I like a lot. In second place is Onto Innovation. I like the pattern. It's got three of the dots in a row coming out of a squeeze. RS is starting to move. OBV is moving. It's not extended. It's below the 200, and that worries me because that's a place you'd expect to be resistance. But if I had to pick one stock right now, and I actually bought it today early when I got the signal, it would be Microsoft. Why? Well, Microsoft's a great stock. We don't have to convince you on that. Great company. It's certainly been a leader. It peaked here back in July, sold off a little bit. And over the weekend, I liked it because it was sitting on free parking, which is the 50. On on Monday, it was up 1%. And here's seasonality, kind of like the market. Um, but this is the reason why. You got the two dots, OBV's taken off. It looks like relative strength is going to cross. And when I look here, it tells me relative strength crossed today, that the green's above the yellow. So the stock that I'm most interested in for tomorrow is Microsoft. It's an expensive stock. And I think we're at a position now where, let's take off my filters because there's more than one FANG stock, where FANG stocks will potentially lead us into the end of the year. Apple, we'll just look at these very quickly. Nice gradual move up. Still like Apple. Amazon, I'm in. I'm in all these actually. Pull down, bounce up off the 50, but not nearly as exciting as Microsoft rather. Google, what a great day. Still benefiting from this gap up here and this run related to winning some litigation. Meta, moving up off the 50, an attractive buy point, just like Microsoft. There's Microsoft, again, attractive buy point on the 50. Netflix has sold off. I would wait till it got above the 50 before I got excited. Nvidia, could have done bad today because Chinese announced some type of an antitrust investigation, I think related to a prior Mellanox um, acquisition. And you could see Nvidia is sitting right here on the 50. So as I said over the weekend, it looks like it could be setting up. I got to see some positive momentum. And notice that the relative strength and the OBV are both -1, which means they're below the moving averages. And lastly, Tesla's on a great run here. Maybe it topped, it closed down here. I don't know if it topped. I'd probably be taking some profits if I was smart enough to have bought this breakout. But Tesla has led the way. I like buying stocks off the 50 with momentum, and we got quite a few of them that I showed you, and I'm still sticking with Microsoft. Have an awesome day in the market on Tuesday, and remember, in about day and a half, 2 o'clock on Wednesday, we're going to get the signal. At least whether there's a cut or not. We know the answer, 25 basis points. Take care.